What's up guys, Victor here. Welcome to the first video on my channel. A quick background, in this channel I'll be discussing financial markets, stocks, bonds, crypto, NFTs, you name it. I'll be providing weekly updates and from time to time I'll be discussing certain topics I find interesting. It goes without saying, none of this is financial advice. Let's jump into it. So we are in a bear market, as you can see from the meme on the slide. But seriously, this has been an interesting week as we have witnessed a change in investors' sentiment. Investors are no longer afraid of inflation, instead they are afraid of recession. Why is that important? Well, we are trying to see whether we are at the bottom or not. Talking in terms of S&P 500 price, it is defined by a simple formula, PE times earnings. PE multiples, i.e. the valuation levels, have come down over the past couple of months significantly, hand in hand with increasing yields, which in turn have increased due to the higher expectations on inflation. So now the PE is at a relatively reasonable level, 15, 16 times forward earnings. But what is not yet at a, in my opinion, reasonable level is our earnings. We still need to see earnings compression, in my opinion, 10, 15, 20%. So, given the simple formula, if the earnings compress by 15-20%, the S&P 500 price should go down by 10, 15, 20% as well. Of course, this drop might be compensated by increase in the PE, but in any case, who knows whether we are going to go down or not, but it does not feel like we are at the bottom yet. Hence, we are still in a bear market. Let's discuss the performance for the week. So, S&P 500 down for the week by, let me see, 2.3%. Volatility down for the week as well. Well, this is interesting and it is not super common. And this might suggest that traders are not as hedged as one might expect. And going into the next week, we might see probably some larger moves. Yields on 2-year bonds. Well, this week we started in the range of 3 to 3.1%. We are ending the week at 2.8. Earlier on Friday, we reached all the way to 2.7. So again, guys, this reflects the earlier discussed change in sentiment. Investors are no longer afraid of inflation as much, hence they are not pricing in as high terminal Fed funds rate as before. Investors are pricing in instead higher risk of a recession than before. Dollar strengthened for the week, again kind of a reflective of a flight to safety. Oil pretty volatile throughout the week. The movement within the week was 8%. That is quite big. Ethereum and crypto market, well, down, doesn't look pretty, minus 15%. Let's look at the heat map by sector. Consumer cyclicals, communication services, technology, financial services, all down. What is up? Healthcare, aerospace, utilities, energy. Some data we received this week. So consumer sentiment down to 50 points. Well guys, this is significant. This is the lowest reading since the 1950s. Manufacturing, well, at 53 points down, below forecast. Construction spending also down below forecast at minus 0.1. So all of this supports the change in sentiment recession is here or is coming. News from the crypto land. Pretty bad news this week. So BlockFi acquired by FTX. So FTX is providing 400 million credit facility, and next to that they get an option to acquire BlockFi at the price of up to 240 million. Well guys, a couple of months ago BlockFi was valued at I believe 5 billion in I believe Series D. So this is a huge drop. Another bad news, one of the largest crypto hedge funds, Three Arrows Capital, files for bankruptcy. Well, this just follows the bad news from previous weeks. Terra Luna collapse, Celsius, now BlockFi, Three Arrows, what is next? Some pieces of information I found this week interesting. So NFT volume down from the April highs, but what is interesting is that Gem, the NFT aggregator, is beating Genie. And another news I found interesting is that layer 2s on top of Ether, such as Optimism and Arbitrum, are gaining market share, gaining traction. So to me, this suggests that going into 2023, we will see Ethereum and layer 2s as a dominant crypto infrastructure. I'm not extremely positive on other layer 1s. News from Ukraine. So this week Pentagon announced another package, this time worth 700 million. And this is an interesting package. Why? They are providing HIMARS rocket launch system. Why is this interesting? Well, due to two reasons. Firstly, this is a powerful system. It will help Ukraine disrupt Russia's logistics. But more importantly, it is a hungry system. So each of these trucks will consume hundreds of tons of rockets each day. And I believe this time around, Pentagon is sending 4 or 5 of these trucks. So really by sending these trucks, Pentagon is committing to supplying these rockets going forward. Again, shows us the war is nowhere close to final. So, lastly, what is happening next week? We will be getting data on employment. We will be getting FOMC meeting minutes. And don't forget, guys, the week after next week, we will be seeing ramp up in the earnings season. So really an interesting time. Thank you. See you next week.